Estate with Chambers Real Estate Team at Berkshire Hathaway Home Service Ambassador Real Estate Company. My name is Mark Wehner, the second team leader here. Welcome to, like I said, every Wednesday we jump on here and go over kind of what's gone on in the real estate market over the last 7 days. Keep you guys informed, keep you educated. So you guys, if you're out there in the real estate world thinking about buying or selling, you have the up-to-date information, data, so that you can make an educated decision, and that's what we're here to help you with. So joining me today is Russ Williams with Williams Mortgage. So he handles all your money needs when you're going to financing a home, refinancing, anything to that sort, helping out with investment properties, first-time home buyers. The different products they have is great. They can basically, have a boutique of options that are out there. Being a mortgage broker, they can go out to different investors, lenders that they can work with to right size your rate, all that good stuff. So, but our quick tip today, usually we try to start out with something going on in relevance. So as Russ saw, I was just on the phone with my insurance adjuster from the tornado that we had happen here about a month ago. So still working with that kind of fun stuff. But that's just something, caught my attention, and what I'm seeing is obviously insurance rates have been going up, recently nationally. You're seeing some of those, that have been really increasing. When I started getting in the business, when I got my license 16 years ago, when we do our cost sheets, insurance really wasn't usually like a huge number that you really worried too much about. Everyone, you need homeowners insurance and stuff, but now with the costs have increased so much, over the years, just with a lot of, storms and just, cost of materials to rebuild things, windows, and things of that sort. I know one of our windows in our house that we're getting replaced is like an $8,000 window. It's like crazy. It's just three windows together, just type of thing. And I'm like, holy shnikes, that thing is $8,000. And, you got a couple of those in your house, that thing starts to add up, and those insurance companies are starting to lose their shorts on some of this thing. So when we're looking at buying houses from a home buying standpoint, make sure you're working with an agent that's, reminding you, hey, as we're looking at houses, maybe it's a good time to obviously talk with an insurance agent that you work with and say, hey, here's the houses I'm looking at. Here's just give them one. Here's an example. What would an insurance rate be on a, $300,000, tri-level house? What would that be? Is that $2,000 a year, $3,000, $4,000 a year? Because that's going to make a huge play, in what your monthly payment's going to be and the affordability of it. And obviously, as you go up or down on that price point, it's all relative to you and your coverage. The other thing is, looking at is your house covered? Those may have existing policies. Do you have enough that if, God forbid, another tornado hit, I've talked with a handful of people that they're getting paid out, but they're short what it would cost to rebuild that house. And so they're calling me saying, hey, what should we do? Should we do this? Should we do that? Happy to go over that, giving you my professional opinion from a real estate perspective, help you in any way, shape, or form. But get in contact with your insurance company or adjusters and things of that sort, and right size, like we said, right size your rate, right size your policy to make sure that that's covering your insurance needs. And then, if you're buying a house, make sure you factor that in. Make sure you're working with an agent that's going to help you with that, because all of a sudden you don't want to get to, home inspection phase. All of a sudden you're going to accept a contract. It's like, hey, go talk to an insurance adjuster or insurance agent and get insurance for the house. Okay, here's your policy. Oh my gosh, I didn't realize. I thought it was going to be $2,000 a year. It's $4,000 a year. Well, Mark, I don't know if we can get into this house. And we just had a mastermind meeting yesterday, talking about just how insurance is really kind of playing a factor with people all of a sudden realizing, oh my gosh, my insurance rate's up. I need to get out of the house. They're doing home inspections, and all of a sudden, people are, walking away from or getting out of contracts. Maybe not necessarily the home inspection came back bad, but there's something on there they can use to get out of the contract. In our mastermind, they said we had over 100 contracts last month that basically fell through, which that was, and we had about 1,000, contracts written. So that's 10% of the transactions that got written at Berkshire here that fell through. So that's our broker, Vince, was talking. He's like, that's kind of an alarming number. He's like, what is going on? So that's what we talked about in our mastermind. So when we're in our mastermind meetings, it's that's what we're trying to pass on that information to you, the consumer, our clients, buyers and sellers, so that what's going on out there. And I think some of that is, we talked about it, that, after you get your contract written, then you're like, oh, we got to talk to our lender, get our final loan approval. Oh, now we got to get our, like I said, get our insurance policy set up. And maybe that's the first time you've talked to your insurance agent and going, oh, well, you're like I said, your policy is going to be $4,000 a year. Holy shnikes. I thought it was only, when I bought my house a handful of years ago, it was $1,500, $2,000. Okay, well, times have changed. So work with an agent, work with a team here, Champions Real Estate Team, that's going to help you all those steps of the process of, hey, you're thinking about buying a house. Hey, let's talk to your insurance agent, talk to a lender, make sure you have all your ducks in a row. So that's kind of our quick tip, maybe a long-winded quick tip. But that's just what we're talking about and what's going on in the real estate market here. Because we don't want you to get excited. You finally get an accepted contract. All of a sudden you get to the home inspection. If we've got those home inspections out there, and all of a sudden you're like, Mark, I don't know if we can afford this house, or we're going to be strapped, or, we're going to be, we can't go out to dinner. We're going to be house poor, what they call. You're just living to pay off your house. We don't want that. We want you to get comfortable in that house. And we don't want you to get all excited. All of a sudden the air comes out of the balloon and you're deflated about it. So that's just, we want to make sure that stuff is taken care of up front. And that's why we do like our buyer consultation meetings and go over kind of the entire process so that, we know where we're at. Obviously, we say it hundreds of times on this little program here. We get a game plan for you. So let us know what you think about that. You can comment on us, and what your thoughts are on how the insurance rates are affecting you personally or what you're seeing out there. So comment on our YouTube, Facebook. Let us know. Let us know your thoughts. And we're happy to get some conversation going. So sweet. Well, let's rock into what's going on in the real estate market here. Let me pull up our graphics we use. That one's good enough there as it pulls up. So we had 691 new listings go live in the last 7 days. So that's first time we broke over that 600 mark. I know I ran my numbers a little bit later today. I had to go to the dentist, so that was exciting times. But all good with that. But the so our numbers might be a little bit higher because I usually run these numbers usually about 8, 9 o'clock in the mornings on our Wednesday mornings. But I ran them today about 11:30 when I got into the office here. So, but so we have a lot of houses, 691. Go live, 431. So we had 432 last week. So the buyers' activity is stabilizing. We're just seeing some more houses come on the market, which is great. We need the inventory. We had 435 happy new homeowners with regards to that aspect of it. So let's take a look at the 30,000 foot view. Like I said, this is like their 30,000 foot view. This number hasn't changed too much. We had 2,900 homes active in the Omaha MLS. We had 1,700, almost 1,800 in Douglas Sarpy County. Our existing homes kind of jumped up just a little bit at 861. New construction jumped up about another 100. So more homes probably just came online, obviously, within the last week. So that's probably where our large jump came up from. Basically, we were out right just last week. We're at just under 2,800 homes. So a lot of that is basically the new construction that just came on the market. Those houses that, they broke ground, beginning of the year. They're starting to get the studs, get the drywall phase. They know where they're at about 90 days out from being complete. So, hey, let's put those on the market. Let's get them off the books in that sense. So that bumped up our inventory by about 1/10. So basically we're 2.3 instead of 2.2 last week. 341 up $1,000. Average sold price there. So just, about where we're at normal, about that, 3 to 4% appreciation or increase there at 3.7. We're still seeing some pretty good activity with buyers out there. We're coming into the College World Series weekend here, so welcome all those people if you're watching us that you just got into town and you're checking out the real estate market, what's going on. So, give us a holler, happy to help you. But that's kind of a big picture of what's going on in our real estate market. So let's jump in here with Russ Williams at Williams Mortgage and kind of see what's going on in the mortgage world. So how are we doing, Russ?
Doing well, Mark. I can't echo enough what you just said in your opening with the quick tip that insurance costs year over year have gone up, depending upon the type of insurance, in the range of about 20%, and that's a significant cost you incur. So it's interesting that this morning we actually had the May reading for the Consumer Price Index, or CPI, which is a retail measurement of inflation, and it came in less than expectations, which is good. The entire market, me included, has really been wanting some better numbers, and so we saw a little bit of improvement in rates today, but we have the Federal Reserve Bank speaking today. They will release their policy decision just after 1 o'clock Central Time, and then they'll have their press conference shortly thereafter. And they have a history of putting their foot in their mouth. Keep in mind that about 40% or a little over 40% of the inflation number that is viewed is based upon housing-related costs, whether it be rent cost or a home appreciation cost or owner's equivalent rent, which is rent away from home if you go to rent a hotel, that sort of thing. So I expect that we may give a little bit of what we saw in improvement today back as we continue to wait for other inflation numbers to come out and for the jobs market to kind of move. Now, having said that, rates are fluctuating without paying points somewhere either side of the 7% mark, and we think we'll be here for a little bit longer before we before we see much movement. Obviously, geopolitical things we can't control, but just based upon the data, we are seeing the leading indicators, continue to see the leading indicators of an economic slowdown. Does that mean recession? Not necessarily. But if we do see a recession, typically in recessions, in fact, in all cases since the 1950s, recessions have led to lower rates. But we do anticipate seeing some improvements. Market, we've talked about many times here over the course of many, many weeks, that if rates do happen to drop, folks, we're typically going to see more interest, more demand for housing. And that means more competition for you when you go to buy that next house. So I'd encourage you to get a hold of Mark and his team and get a game plan together. And to echo one other thing that you said, Mark, about the 10 to 15% of transactions that have fallen through in the Omaha market in the last, I think you said month or they're over. There's some data out from Redfin that says about 16% nationwide, 16% of all transactions are falling through. And about 5% of those are based upon lenders, the lending process falling through. Roughly 75% of all real estate purchases are financed, and a significant reason for those fall throughs are the lender not doing due diligence. So in the event you'd like a second opinion, or just to make sure that you're getting a good deal, we'd love to help you out and make sure that you're taken care of, and that Mark and his team have a good game plan from the lender to help you find that next home.
Yeah. And we were talking about this in my mastermind meeting yesterday. The highest offer may not be the best offer. From a seller, we're talking about this from a buyer's to get, the rates and stuff. But from a seller's perspective, we want somebody that can perform and close on the deal. So they may, get crazy high on the price. But if someone's doing a, conventional loan, and when we can see they're putting more than 20% down, that person, may be a little bit stronger position from a buy standpoint of it. And so, us as agents, we may say, hey, here's the thing. You got one that's really high, but who knows, are they able to get to the finish line? And so that's stuff that we coach, our sellers on too, and obviously we don't want the house to go back on the market because it may not be any fault of the seller, that you said, like insurance rates, all of a sudden they do that and then they walk out of the contract. You put the house back on the market and everyone's like, oh my gosh, what's wrong with it? Well, there's nothing wrong with it, and so all of a sudden, now buyers want to think, there's blood in the water and they can get out there and just start lowballing offers. And, that seller's desperate. They had a contract. And so you want to make sure as an agent, you're really trying to, solidify that offer as best as we can. I mean, things happen out of our control and those, but we have to be able to hopefully navigate those waters and keep that process moving forward to the finish line. And so that's what we do, as an agent and being around it for 16 years, in that standpoint of it. So, but making sure we're going through there. But, yeah. So welcome all those people that are in town from the ACC and SEC areas, because that looks like what we got from our pool of play that we're going to have at the College World Series. So welcome to those people. And if you're thinking about buying, we got great investment opportunities up here from rentals and stuff like that. Very affordable. Then probably some of those Florida properties and things of that sort down there. So yeah, we're happy to help you in that regards. Like I said, I own a couple investment properties myself, in that side. So, but, yeah. And I guess on the renting side, so back to renter's insurance. If you are renting a house, make sure you have renter's insurance just for the unforeseen things that happen. It's not that, to my knowledge, it's not as expensive, but it helps cover your items in the house. So, your landlord, your property owner is going to have insurance on the structure. You need to have stuff on your contents in that house. So I guess that's just a little sidebar at the end here for our ending quick tip. So, but if you have questions, give us a holler, 672-7670-290-8936 with Russ. Happy to help you sit down and rock and roll with it. So, and see you guys later. And I may be coming from a different location next week. So keep a lookout for that one. So might be rockier than we thought. So anyways, take care, guys.